The whole idea is to create a place where thinking, ideation, creativity comes out, and it's not an operational place. So we have two offices in Mumbai, but this is not a part of normal office. And it's a 5 acres campus and 55,000 square feet. It's completely IoT driven. So even garden has chips in the trees to measure the health, and it's fully automated building. So even this is a reception where with through the sensors, if at night somebody goes or during the days, if nobody is there, our California operator can also attend to that and stuff like that. So this is we have 600 kilometers of cables underneath, and so it's one of the most high-tech buildings in the region, and we would love to have you. It's for high-level thinking, ideating, creativity, as I mentioned, and ideation happens in different settings. Sometimes you think alone, sometimes you think in a group of 2, 3, 5, 10, 15, 20, 100 people like that. So we have auditorium, we have library, which is again, if you see library, it has no books, book racks, because now no longer you need. History is digitized, information is digitized, and future is about experiencing tomorrow today. So it's a setting where only business class seats we got specially designed by for us, and so any of you want to laze around or come around, most welcome. Also, there is no revenue model. We put in $20 million, but there is no revenue model. But it is purpose driven and people driven. So it's a private property for public good. That's the model. So if there is anyone who has good big idea, okay, and you want to think, ideate, want to bring thought leaders, or especially where there is large scale impact or something like that, is there, be our guest. We don't charge rentals. We are simple lawyers and not as rich people as some of you sitting here, private equity people and all those kind of. So, yes, you can, but you can breathe freely, God has given most precious things in life which are free. So you can breathe fresh air. Anyway, this was this aviation minister who inaugurated and stuff like that. So I thought I'll just give you a little glimpse of that. What I would also like to do, there is a 5-minute video by the finance minister of Mauritius, and he was going to be here today, but as I mentioned, due to the impending budget, the Prime Minister's office did not give clearance for him to fly down, and also we have advised government of Mauritius on new regulations for blockchain in fintech and regulatory sandbox in the context of virtual currency, ICOs, and also other applications of blockchain, that kind of sandbox approach. So that our committee comprised of Lord Nishith Desai of the UK, is one of the most renowned economists in the world. Also Loretta Joseph, she's on the OECD, and people like that. So we gave a report to have Mauritius become most important blockchain center, while retaining its own reputation in terms of the bad use of the technology. So I think some of those things are going on. So today that report is being released by the Prime Minister of Mauritius. So again, he was held up. So our apologies that he has not been able to be with us, but we'll be happy to share with you that if some of you are interested in fintech and the regulations, we'll be happy to share with you as soon as it is made available today. So with those words, I think should we play for a few minutes the video? So Chief Executive Harvesh Sigalam, his
Mr. Nishith Desai, founder of Nishith Desai Associates. Dear friends from the industry, ladies and gentlemen, a very warm greeting to all of you from Mauritius. At the very outset, allow me to extend my sincere apologies for not being able to make it physically to this very interesting conference that NDA has been organizing over the last few years. I understand that this year turnout has been very successful and more than 160 people have attended the entire day. That in itself bears testimony to the importance that you attach to the Indian market as a key recipient of investment. And certainly, ladies and gentlemen, when we speak about Indian market, I think Mauritius as an IFC becomes very much synonymous and very much relevant. It is true that over the years, Mauritius has consolidated its position as being the preferred platform for investing into India, and that's because of a number of reasons, which I'm sure you're all very much well versed with. I will certainly not dwell on those particular reasons, but I would like to address for today's gathering key topics, and those key topics have to do with two major developments. First and foremost is the continued confidence that we are seeing in the Mauritian jurisdiction following the revision of the India-Mauritius Double Taxation Avoidance Agreement a couple of years ago. I must say that over the last 2 years, we are seeing, contrary to many other projections, a growing confidence in the market. And at the level of the Commission, the statistics are actually very promising. The number of funds and the interest in licensing new funds in Mauritius is very much on the positive side. And at the same time, more interestingly, we're also seeing a diversification in the type of funds that are actually being structured in Mauritius, aiming and targeting the Indian market. This, as I said, is a very good sign to the continued confidence that is being put in Mauritius as a jurisdiction. And at the same time, we're also seeing a very positive evolution in the way these funds are operating in Mauritius. There's much more focused now, in line with all the international developments that are happening precisely to do with the BEPS initiative of the OECD. We are seeing a move towards more substance, and this is one thing that we are putting a lot of emphasis on as the regulator by encouraging more substantial activities to be carried out from Mauritius. When I say substance, we're saying more value-added activities in terms of investment advisory, in terms of the fund management functions itself, and certainly other related activities. And I would here like to really commend this effort of Mr. Nishith Desai personally for having continuously over the years trusted and passing on the most relevant information to all the funds community with respect to the role that Mauritius has to play as a preferred platform for funds targeting the Indian market. On this note, ladies and gentlemen, I'd like to certainly leave this August gathering to further deliberate on the various aspects that are being discussed today. Again, I have looked at the profile, I have looked at the entire program that has been laid out for today's event, and it is a very interesting program. And I look forward to learning more about your deliberations at this conference, and certainly receiving any recommendations that you may have for Mauritius as a funds jurisdiction targeting the Indian market. With these words, ladies and gentlemen, I'd like to thank you for your attention, and I hope to see you all in Mauritius very shortly. Thank you.
So thank you so much for listening to this. In fact, our relationship with Mauritius goes way back early 90s when India opened up in 1991, and there was a major problem between India and the US, and that was the way in which the capital gains rules are written in the US, Code Section 865, and the way in which Indian capital goods rules are written are contrary to each other. And as a result, the tax credit for the US, in the US, for the taxes, capital gains tax paid in India is somewhat of a problem. And the problem is not resolved by the tax treaty. It says that both countries can tax in accordance with each law, So when capital gains are earned by US person from the sale of Indian shares, India considers that it's a Indian source income. But from US perspective, they consider it's a US source income. And therefore, US said that if we have a US person, US resident in India, in the US, and he has a US source income, okay, we have first right to tax. India says no, shares are in India, and therefore we have first right to tax. This problem was not resolved, and then we began to look at different solutions to the whole problem, and we tumbled on this Mauritius treaty, and I went to Mauritius. Long story, but cutting it short. Worked with government of Mauritius to develop offshore financial center. So, and put in place the regulations, the KYC norms, and whole, ecosystem over there. But first thing we had said was to make Mauritius the cleanest jurisdiction. So their KYC is the toughest, although it's sometimes pain in the neck, but it's still worth the pain than tax department giving you some trouble, And number two, that very first company under the new regime in 90s, we set up very first company that was also a fund, Bombay Fund Limited, sponsored by Barclays, Resourceful Investment Management, Index Fund. Second fund was Alliance Capital. Number three, it's a George Soros and Chase Capital, and fourth one was Walter Nico. Like that, first 5 companies we had set up and helped government of Mauritius to develop a very clean jurisdiction. Not a single case of money laundering has been found through Mauritius, so it gets a lot of credibility on that. And there was zero financial services kind of sector contribution at that time, and now financial services contributes about 12%. So in a lighter vein, the minister, while speaking, said 12% of Mauritius GDP is due to Nishith Desai, in lighter vein. Okay. Don't quote too much in public though. And so, we have very long relationship, and now we are advisors to Financial Services Commission, equivalent to SEC over there. And so Harvish he's the CEO, and we, as I mentioned, currently worked on the blockchain ecosystem and other kind of stuff. So we won't bore you, but I thought I'd give you a little break from the regular talks, because you're more brilliant people and the brain count is there. I'm the head count, by the way. So may I request Vaibhav to once again moderate this session? Okay.
Thank you, Nishith bhai.
It will be wonderful to hear all of them.
Good part of this session is nothing to moderate here. This is an industry update. I will turn to the first to Parth. Parth, of course, is the MD of Aeon India. Parth, do you want to just give a little brief about yourself and then go and tell about the special situation?
Sure, done. So, it's Friday and it's 4 p.m., so I'll keep it all quick.
But you can see how many people are here.
Yeah, but we don't want to we don't want to lose people too quickly. So I'll keep it short. Plus, it's special sit, so it's they couldn't really figure out where special sits fits. I mean, think about it. I'm with all the partners of Nishith Desai, so they couldn't even figure out where to fit us. But that's really been in India when we started looking at special situations. I started raising a fund, and we would go to our limited partners, and the first question: what do you do? Is it equity? Is it debt? And it's an emerging space in India. I run about $825 million. It's actually the largest single India-focused private equity fund, single fund. So, in terms of size, we do have that working for us. The way we look at it is we look at 3 different strategies. We look at equity. We have a pocket for credit, so we can originate credit in India. and we also have a pocket for buying distressed debt. And the thesis is you should be having flexible capital, allows you to play the market depending upon what the economic scenario is. So during the early part of the fund, when we had a high interest rate environment in India, it still is, but it used much higher. The cycle was at the top then. We originated a lot of credit, special situations credit, classical structured equity with downside protected, but with uncapped upside volatility. And I think we pretty much wrote the book on that thesis. Of course, since then, there's been a few other funds that have emerged with a similar thesis. That I think it's still esoteric enough that there's very few of us doing it. India, by and large, is a growth equity market. I'd say 90% of the private equity funds investing in India are primarily growth equity. It's a buy high, sell higher mentality. They are essentially banking on the India growth thesis. We do that too. We just don't like paying for it upfront. That's just something which we've not done. Typically, on average, Indian private equity deals have been created at about 15 times EV to EBITDA and north of that. Pretty expensive. Our entire portfolio is at about 5.8 times. So, we do look for specific instances where we can essentially drive value through our process, through our buying, and of course through some size as well. I think the one thing we believe in is the one thing you control is the price you buy it at. Everything else is out of your control. That's the one thing you control is the price you buy an asset at. So that's the investment mentality. I'll walk through each of our thesis and then maybe kind of take questions. In equity, we primarily focus on buyouts. I'd say the marquee deal we've looked at and bought is we bought all of GE Capital in India. Again, bought well, extremely well, I would say. In originating credit, we've done structured credit transactions where we're downside protected, but we have the ability to bank on the growth of the company and essentially get our upside from the growth. And lastly, I think the one that I'm sure Pratibha will spend some more time on is the new emerging distress opportunity. I think India's got a lot of non-performing assets. I think all of you've read the big headlines. What's emerging from that and the new banking code that has come out, the bankruptcy code that's come out, is it allows efficient enforcement of creditor rights. It allows an efficient mechanism and a quick mechanism, time-bound mechanism, to actually effect what is essentially it's a pre-packed bankruptcy. It essentially allows you to, within 270 days, allows the creditor to solve and resolve the asset. And if it's not done in 270 days, 180, and you can do a 90-day extension. If you don't get a result in 270 days, it's liquidation. So there's actually a very focused drive towards getting the distress resolved, and we think there's a good opportunity there. The Indian government, the RBI and the Finance Ministry forced the largest 12 non-performing assets into the process. Almost all of them are reaching the conclusion. One, we believe, is closed. We are the largest bidder on one of them as well. So that process, I think, is working. In that process, there's been quite a few smaller assets which have already been resolved. So again, we can see that I think the process is working. I think Pratibha, should spend some more time explaining, walking you through the highlights of what I think is a very interesting laid out piece of legislation by the government. So that's what we do in distress. Happy to take questions.
Should we take Q&A at the last? Yeah, let's do that.
Actually,
But
Do you mind? I mean, I just want to ask Parth very quickly since we have him. So, do you think distress has come to age? Like distress investing, you were probably early for your time, so you wrote the book. The Big 12 has happened. Do you think the next 12 that are being pushed in will be as successful? Or do you think the first 12 have been successful?
So, well, the first 12, they've not resolved yet, right? So I think they've reached, most of them have reached a place where I think resolution is imminent, but it's not done. So I'll reserve my judgment till actually one is completed. I believe Bhushan Steel got the nod, and Tata's essentially buying it. So I think it's almost there. Let's just make sure that the next 30 days we see the changeover of the board and essentially control moving to Tata. Let's see it happen. I think it'll happen. All my conversations with the regulators, with the ministry, point to the fact that there is a lot of intent from the government and from the ministry to push this through. I think it's needed. I think we really need it. So, to answer your question very pointedly, I think all the right steps are being taken. I'm reserving judgment till it's done.
Thank
On this FPI issue, the FPI and unlisted bonds, etc., which has now been pretty much regulated to an extent that it's almost become impossible. From your perspective of doing special situations, you obviously have domestic vehicle as well. How significant do you think is the impact of this? I mean, it's always good to have this route, but if you don't have it, how significant is the impact?
So I think there's two, I believe there were, seems like, and again, you guys are probably better placed to comment on the intent behind the act or the thought process. Does it affect FPIs? Yes, it does. I think the desire that every issuance has to have at least two buyers on the other side. We like to do bilaterals. Every deal we do is a bilateral deal. Now I have to go look for somebody. Then the other piece, which is the 20% dilution, is also pretty interesting because the RBI, the Reserve Bank of India, is now saying to large big boy investors, you need to have diversification in your portfolio. Well, my limited partners, my investors, drive my diversification. I think the RBI should not be imposing on us. So I think it's an issue right now.
So the question was big issue or a manageable issue? Because that's where I think that's the question.
I think hopefully it's manageable with your advice.
Okay, good.
I think Ruchir is trying to say that, look, if you can't manage it, it's a big issue, come to us. Sorry, can we take question at the last? He will be here throughout the panel. My apologies, I just don't want to.
I'm sorry, I messed it up by saying questions.
No. We'll do a question, but let's do a question at the last so we can manage the time well. Anyway, let me move on to next one, which is on blockchain and cryptocurrency. I will just give an update a little bit on blockchain and cryptocurrency. We have been seeing in last about 3 years, 2 to 3 years, just like rest of the world, India is just exploding with blockchain and cryptocurrency situation in businesses. We started this practice 4 years ago when world had not, most people in India did not know about it, and we studied it very deeply. And in last 1 year, we saw one new client coming to us and saying that, hey, I want to do blockchain and I want to do cryptocurrency. But the real question really was, what was real substance and what was just the hype? And that is the major question, a major issue which today we are seeing in this particular industry in India. Now let's split into 3 parts. One is blockchain, other is cryptocurrency, and third is ICOs, right? Blockchain, which is the really great technology which a lot of us believe will change the world, and including legal profession, not just the banking world or not just the financial services, but including legal profession and a lot of other sectors. The way we look at India, they are primarily in pilot stages. We have not seen larger applications coming out yet. We have not seen large companies applying blockchain technologies. So this is just in pilot phases. In pilot phases, we see a lot of companies, a lot of banks. They are specifically focusing and see how it can help their businesses, and that's very exciting. So in blockchain, you will also see government support. Government itself is looking at saying that how we can use blockchain to do the governance or change the governance. So that's a pretty exciting situation, but it's very early stage. Maybe next year or a year after, you will possibly see lot many companies and lot many activities on blockchain side. Most of the activities in India in this space is on cryptocurrency and not on blockchain. When I say cryptocurrency, I would put it in 3 or 4 buckets. Mining, and yes, mining does happen in India. Not as much as it happens in China or some of the northern European countries, but it does happen in India. And it's still been economically feasible and profitable to do mine in India, at least in some parts of India. But that's something a little less controversial. We are not seeing too much controversy on that. But the other sector where there's a lot of activity and a lot of controversy is more to do with dealings with respect to virtual currency, cryptocurrency, or bitcoins or other coins, right? Altcoins. And which is where a lot of exchanges have been set up, which allows people to deal with that. Somewhere I had read that more than 10% or close to 10% of Bitcoin/alt currencies are actually with people in India and sitting in India and with Indian people. Now that makes it a huge market. Also, because of the regulatory issues, what we saw was the Indian prices in India were at a premium compared to the global prices, which means you had significantly about 20 to 30% premium for people in India who wanted to buy cryptocurrency, but because of regulatory issues, they couldn't buy in exchanges outside India, so they had to buy in exchanges in India. And that's why there was a very lucrative market of exchanges coming and setting up so they can leverage on this opportunity. Also, that became a big market on trying to find ways to really use the arbitrage which existed till very recently with respect to bitcoins and other altcoins. Third, what has happened now in that particular industry actually is that Reserve Bank of India has come with a circular. Now, I think somewhere earlier there was a discussion where question was asked on blockchain and cryptocurrency, and what was very rightly said is that government is very hawkish about it. And that is true for cryptocurrency. For blockchain, government is actually very bullish about it, but I don't think government currently differentiate or is able to understand that cryptocurrency is an essential part of blockchain and needs to go hand in hand. They are differentiating between two. They are supporting blockchain, but very strongly coming out against cryptocurrency, which is Bitcoin, altcoin, etc. Now, my assessment, and this is something which I have held for last at least a year now, is that 3 years from last 1 year, so another 2 years, at least the government will remain hawkish. Government will bring out disincentives and try to create obstacles. By that time, this will get stabilized, especially globally, and as a result, government will start then regulating. So that's what I have told my clients, that for 2 years or so, you need to brace for obstacles from government before you will start seeing things move. Having said that, the latest move of the government has been a circular by Reserve Bank of India, where Reserve Bank of India notified banks as well as other regulated industry, which is all the NBFCs and other financial institutions, to say that you cannot deal with companies which are into cryptocurrencies or what they call virtual currencies, which means you cannot have a bank account. Banks will close the bank accounts of companies which are into business of cryptocurrencies or virtual currencies. Now, this is a very significant move because without banking support, the industry will collapse. So this is the current situation which the industry is facing on cryptocurrency side. And the industry has filed, actually we have helped industry file, so we are filing, we already filed as of last week, a writ in Supreme Court saying that RBI or Reserve Bank of India's circular is actually unconstitutional, and we are hoping that Supreme Court grants us a better option than just simply closing it down. We believe that there are strong reasons why it will do so, at least strong legal reasons. Having said it, the industry has always maintained, and that's what they have been telling the government as well as other sectors, that look, we are not against regulations. We know you are worried about three major things, and that's what Reserve Bank of India has also said what they're worried about, which is primarily money laundering, consumer protection, and basically parallel economy, which means using cryptocurrency as a payment tender in lieu of rupee, using cryptocurrency to buy and sell and doing transactions. So what they've been saying is that, look, we know you're worried about it. We do not want to encourage any company which is into any one of these three things. So please regulate us. If you regulate us, you will actually create a much more transparent, well-monitored system, which will allow cryptocurrencies to blossom without the negative side which you are worried about, right? And for that purpose, the industry actually came out with a self-regulation code, which we had drafted even before the circular came up. And they are actually pushing government to see it. We don't know whether the government will agree to it or not, but that is current situation when it comes to cryptocurrency. The third aspect which I will just talk about is on ICO side. Now, ICO, we know, is very popular. A lot of people are saying that, hey, if these ICOs have become very simple, why would they come to venture capital or private equity for money? They will simply do a ICO, right? What is something which we need to worry about? Is it something we need to look at it? Currently in India, the ICOs are not very popular or not very easy to do, and honestly, we have not seen any ICOs. There are a couple of companies which have done ICOs. We don't believe they have done in legally compliant way. They are young guys who have simply gone and done it. But that's not something which is easy to do in India. Just to give a little bit background on that, when you look at ICOs, you split it into two types, either security ICO or a utility payment ICO. Utility ICOs, security tokens or utility tokens. When it comes to ICOs, security tokens under Indian law is regulated. You cannot do it. SEBI, which is our Security Exchange Board of India, have not yet come up with regulations which permit it. Though what we have heard is that they are looking to come up with some guidance, some regulations which will possibly regulate the security tokens ICO. When it comes to utility tokens, utility token ICOs in limited circumstances can be done. Unlike in rest of the world where it's easy to do utility tokens ICO. In India, you can do it in some situation, but there are still a lot of obstacles in getting it done. Primarily, they are with respect to what is the time in which the services need to be provided when it comes to the utility ICO, in the sense that can you issue a token and which can be redeemed after, let's say, 2 years, 3 years, 4 years, is it possible or not? And that becomes a question. I think with this, I will stop here. And
so can I just intervene for a second? Having heard a lot from our blockchain expert, Webunar+, if you see your box, in that there is a one-page paper on blockchain. One page is with QR code, so you can have the full paper. And also there is a paper on the Bitcoin global perspective with special reference to India. And there is also a compilation of our research papers, as I mentioned, our research approach. And there are a number of papers, including on the drones and on IoT and driverless car and so on and so forth. You will see in that box. But here is a research compilation, So in that you will also find somewhere the self-regulations, hopefully. If somebody wants to read what they look like, so we drafted them some time ago and put in public domain as well. And so there are a number of papers in that, besides some information on the Imaginarium. So I don't want to take too much time, but just draw your attention. Don't forget to take your box home, like sweet box, all lawyers can give his papers a little bit. Now we are giving soft as well, but that's there. Okay, go ahead.
Okay, going back to agenda. Nishal, you want to talk a little bit on the update on financial services?
Sure. So I'll keep it short. Broadly, the financial services can be categorized. There are many categories, subcategories within financial services, but the three main categories would include: one is the non-banking finance companies, the second is insurance space, and the third one is asset management space. As far as the NBFCs are concerned, debt as a product became very popular in India uh, post 2012, 2013. What had happened was India opened up a number of sectors in early 2000, and what we saw was there was a surge in the equity money which came into India. Especially between 2006 to 2008 was the time what we call period of honeymoon investing for the LPs in India. And what happened after that was when Lehman crash happened, everything, including India, India, including various other emerging economies, went into recession, which is where number of equity deals which had happened or for which investments were made earlier, they went into dispute with the Indian promoters because the Indian promoters could not honor the obligations which they had promised to the international investors. What happened after that was the LPs became cognizant of the fact that because of the recession and the exits not happening in India till 2011-12, it's better to invest through debt instead of equity, because at least when you're investing in debt, you at least get regular coupon versus in equity you are investing in year one and you may get your first dollar back after year 6 or 7, which is a typical life cycle for any investment in India. So what we saw was surge in debt funds and debt vehicles like non-banking finance companies, where we started seeing number of private equity funds setting up their own NBFCs in India. So we saw KKRs of the world, Goldman Sachs, they have their own NBFC, and many other top bankers like Vikram Pandit was the ex Citibank head. Then even latest one being Gunit Chadha, who is the Deutsche Bank Asia Pacific head, former Deutsche Bank Asia Pacific head, setting up his own NBFC. So what we are seeing now is there is a huge surge in the number of NBFCs which have come in, and now there is a cutthroat competition going on amongst the NBFCs for lending to Indian corporates. It's a lucrative business model because you get about 16 to 18% coupon or the returns when you're investing through NBFC, especially sectors like real estate where the risk is very high. You are able to get about 16 to 18%. Although there also now the rates are getting more competitive because of the number of NBFCs which are in place. Interestingly, what had happened, in fact, I'll just quote one incident which happened where Ruchir and I are working for a client. It was a sovereign wealth fund, and they were making large investment in an Indian listed NBFC, and this investment was to be made somewhere in November of 2016, and what happened was on 8th of November was the date when the board of the listed company was going to meet to consider the proposal for investment by the sovereign wealth fund. So we were required to submit the bid binding bid by 6 p.m. that day. On that day, the price at the ruling market price was somewhere around 720 rupees per share. Now, the sovereign wealth fund submitted the bid to invest at 720 rupees per share at 6 p.m. And just in 2 hours' time, at 8 p.m., Mr. Modi, who is the Prime Minister of India, he came on TV and announced demonetization. And demonetization, one of the biggest sectors which got hit because of demonetization was financial services companies, especially NBFCs. What happened was next day when the markets opened, this company's share price fell from 720 to 530, and the day after it fell from 530 to 440 or something. So just in 2 days time the price fell by almost 300 rupees. So the issue came up. Obviously, we got on the call with the clients, and we had highlighted one risk, that why don't you have a material adverse change clause, MAC clause? Demonetization can fall within MAC. But the client took a call, this is a small sum for us, and we don't want to get into negotiation. It's a deal which has come from the top, so we can't negotiate much. But these are the times when some of these clauses become important, where you especially with the current prime minister who can call the shots anytime. It's very important. At least we have started building this in deal documentation, that even if the period between signing and closing is 1 week, always have a MAC clause. He can come anytime on news on TV and announce things which could be either good or bad. In fact, it was good for companies like Paytm, fintech companies, but bad for NBFCs. So this is something which interesting incident which happened. Obviously the client said ultimately that we don't want to back out, but we are looking at long term growth of the company. So this is a small phenomena which has happened, should not be a problem. The next sector, the next subcategory within financial services is insurance. This is a sector which is getting a lot of traction from international investors and especially financial sponsors. What we have been seeing here is insurance companies, they are making they are coming out with decent results, and that's where the valuations are also becoming good. In fact, one of the companies we are right now working on, it's one of the largest standalone health insurance company which is up for sale. This company's valuation was about $300 million 1.5 years back, and today it might get sold in the next couple of months for $1 billion. So in just 1.5 years time, the valuation has jumped from $300 million to $1 billion. What another important change within the insurance sector is the government has liberalized the requirement for financial sponsors to acquire insurance companies, which was something that was not allowed earlier. And that's why we are seeing a lot of insurance from buyout funds to acquire insurance companies. On top of that, in the last budget, the Prime Minister also announced the largest healthcare scheme, healthcare insurance scheme for India, the equivalent of Obamacare, what in India we call Modi Care, which is going to give substantial boost to the insurance sector in India. So overall, insurance sector is very hot. The number of IPOs also happening of insurance companies, and that's where we are seeing a lot of activity. And the third subcategory is on the
30 more seconds to you.
Yeah. So 10 seconds are gone because of this. So asset management business is the third category which we have been seeing a lot of interest, and here we are seeing number of new GPs coming up who are who have left large MNCs or financial sponsors or private equity funds and are setting up their own funds. So they are raising money both from offshore and domestic LPs, and that's another area where we are seeing a lot of activity as far as the financial services sector is concerned.
Thank you.
Before time.
Thank you, Nishith. Really appreciate you, and requesting everyone else, including myself, to stick to 5 minutes.
You can't say this after your session is over.
Pratibha, next to you on infrastructure.
Thanks. Actually, just very quickly, I would like to disagree with some of my previous panelists. In terms of the regulated sectors, and infrastructure definitely falls within them. There's a significant opportunity in India in the infrastructure space. The government needs an investment of $1.5 trillion over the next 10 years. And sitting in Delhi, what I have seen is a significant focus of the government in the infrastructure space, and coming out with innovative solutions for getting this and to get the funds industry to invest in Indian infrastructure. So if there is one space where I'm not seeing, 2 steps forward, 1 steps backwards, at least right now, is the infrastructure space. And it's also, I think sometimes, we do a broad brush. Once you say don't invest in regulated sectors, everything's regulated in India. You do an automatic sector deal, and you don't get your GPR from the RBI, which is mandatory for any foreign investment, and you're stuck for 7-8 years. So that's India risk. At least with infrastructure, it's a sector where there's significant tax breaks. You can invest through the FVCI route, which is not the FDI route. Government's very focused on working with you to solve issues, and we've solved big ones. Matt sitting here, we on Asian Genco, we were able to get. We actually had a situation where the minister sat with us till midnight, got everybody in the room, the lenders, the state representatives, and actually found a solution and didn't let anybody go home till he found a solution. We got the Bombay Stock Exchange listed. It's a market infrastructure company. We got NIF done. Where else in the world will you find government passively giving you 49% of the money, giving up control to attract the rest 51% to invest in infrastructure sector? It's an extremely innovative model. It's taken us 2 years to do it, but it's out there, and it's actually giving confidence to other investors to then invest in the sector. And when we are seeing the dialogues in the sector, it's very encouraging. Specifically, sectors, roads is obviously talked about the most. There's innovative structures that the government's come up with since BOT didn't work. They have the hybrid annuity model where the government's taking significant risk themselves. There's the TOT model, transfer, operate, transfer, where we saw, in fact, 3 private equity funds bid, and Macquarie actually bidding 50% over the bid price, and the other 2 were funds too. That was the first phase of TOT, and the second one's about to come in a month, and we are already getting calls from clients asking to be ready for that. So great amount of interest in the road sector. We've seen secondary deals. One of our clients, Brookfields, did a $2 billion transaction in the roads sector. So it's extremely hot. Other sectors that we are seeing a lot of interest in within infrastructures, of course, renewables talked about a lot. Again, there are significant issues in this sector. There is pain. There are tariff issues for wind and solar, and yet Renew IPO has been extremely successful, which we just got done. I'm trying to shorten this, but there are other sectors that are not so talked about. For example, ports. We are seeing a lot of interest, very quietly, but we are seeing a lot of interest being developed in the port sector. NIF did a platform. They did the first deal in warehousing, but it is a platform. It's a $3 billion platform for investment in ports with DP World. We've seen the ministry, very strong minister there. It's helped, and he's talking about inland waterways, something Nishith is very passionate about, given Ali Gunjan. I think the one area where we are all still baffled and we are hoping, and I think this will have to come to roost soon, is the power sector. We've just not seen the government take the hard decisions, even though they've talked about, policy decisions such as not allowing more than 15% of loss being factored into the supply price, and penalizing if power is not supplied in transmission sector. But there are significant, some of these assets are going to come in the next round of the insolvency process, then on the list of the 12 that are coming up next. And we're going to see significant haircuts there on this. If we, we're expecting about 70% haircuts. If that doesn't happen, deals won't go through. I have to ramp up. Anybody is interested in infrastructure sector and getting it solved, happy to talk later.
Apologies, this sector, supposed to have 5-minute roundtable, but such that we can do 5 hours on this.
I think what you say is that there is always a problem in India, but there is only one solution, and that's to have a good lawyer. Oh, thank you.
Absolutely. The way I mentioned that, right? Like, get the right advisor.
Okay. Let me quickly go and talk on technology and TMT side. In India, we still consider consumer internet as on technology side. And when you look at consumer internet side, last week we saw the Flipkart Walmart deal being announced. That is one of the biggest deals which India has ever seen. And that basically says a lot about this particular sector. We feel that this is one of the first deals. Luckily, we were involved as being a legal advisor to one of the selling shareholders. So we have seen how these deals will go and make a new ecosystem which will give spur to this kind of industries. We are in keeping that deal aside, we are seeing a lot of large companies today. When you look at unicorns, mainly they are in consumer sector, right? Whether you talk about Swiggy, whether you talk about delivery, whether you talk about Paytm, most of them are in consumer facing consumer internet. Though they'll fall into logistics, they'll fall into fintech, they'll fall into some other ones, but that's where there is a lot of activity. Now, I was talking to someone and I was told that while we have a lot of large companies there, in future there will be incremental innovations there, but some of the other industries which are let's say the software product companies, the SaaS companies, the B2B companies, that is where the next phase of growth will be. And that's something which brings me to the next section, next set of industry where we are actually seeing a lot of growth is on the SaaS side and on the B2B side. We just did a deal where a relatively new startup, just about a year and a half old, on B2B side was valued at $200 million for getting their Series B round, which in this current Indian market, in my mind, is a very successful raise deal. This is something which I feel very good about, because India always has been consumer internet side, but B2B focus is just now coming in. So that's something which is a space to watch out for. Going from there to traditional software services industry, it has been India's forte since start. And even now, we are seeing a lot of interest, both among financial or private equity and on strategic side, on the software services side, right? We just did one deal for over $300 million when Aero Electronics, which is a Fortune 120 company, acquired Info Chips in India for, as I said, more than $300 million. I'm just doing a deal where a sovereign wealth fund is paying $200+ million for getting 20% stake in again a software services company. So that sector is stable, continues to have a lot of large deals, and it's keep on happening, and I think it will keep on happening too. On the startup or the smaller side, or I would not say that it's a mixed thing, right? We are seeing a lot of activity on analytics side where large companies are there, companies like Mu Sigma, Fractal, etc., which continues to do well. And then on AI and IoT side, where there are still startups, we are still seeing, we're not seeing larger companies come in, but there are a lot of companies which are very attractive and showing good promises to growth. Turning tracks, looking at telecom side, telecom in India is currently not considered to be a very attractive sector, in the sense that what used to be at several years ago, where there was again a consumer growth where Indian mobile penetration grew several percentage. In last couple of years, especially because of entry of Reliance Jio, that sector is slightly in consolidation phase. It's not doing that great. But even in that situation, especially in telecom infrastructure side, we just did a deal for one of the shareholders, which is Providence Private Equity, where they held 5% stake in Indus Telecom Tower, which was sold, or which is signed that it's sold to Bharti Infratel. Again, totally it brings the deal value to about $10 billion. So you're seeing this kind of deal in telecom industry also, even though that industry is not doing good, it's mainly for consolidation perspective. And lastly, just a point on media and entertainment. Now, this is where we are seeing a lot of interest in new media, where they are trying to go and focus on getting customers on viewership on, for Netflix and Amazon Prime and Hook and Hotstar and those kind of things. So that's where there's a lot of activity on content side. I think with this, I will stop. I know I have exceeded by a minute. My apologies for that. Ruchira, I'll come to you for real estate. If you can give 5 minutes on real estate.
Yeah, thanks. I think it's not always the best to have the last word. If I had the first word, probably I had a little more time.
Sorry, I will have the last word, don't worry.
Oh, you have the last word? Okay. So I will summarize this very quickly. I think if we divide real estate into two buckets, one can be the yield generating bucket and second can be the developmental asset bucket. I think from a yield generating bucket perspective, I think core assets have been the flavor. More and more investors, some of the larger pension funds, sovereigns, etc., have been showing a lot of interest. One critical or one significant development obviously has been the coming of age of the REIT regulations. Hopefully we should have the Embassy Blackstone REIT triggering the market sometime later this year, probably by earlier next year. Just so that you guys understand, in India, we, some of the larger, property brokers would tell you that you can achieve a yield of about 6 to 9%. Now, Pat, you can guess where do you ultimately end up, but that's the estimation people give on the yield. And you couple that up with capital appreciation of about 5%, that's how you reach around a 14%, and that's what Blackstone has been trying to package for a while. There are 12-13% kind of a bucket in terms of the return expectation. The challenge that the REITs, just while we're talking about it, the challenge has always been both from a sponsor perspective as well as an investor perspective. The Indian sponsor, who's really close-minded generally, and runs the real estate in a more of a family manner, is not able to differentiate REIT from a LRD model. And according to him, that he's anyways getting funds at 8% cost, so why does he really need to go for a REIT? I think that's one challenge that you face from a sponsor perspective. Also, there are certain restrictions in REITs. Indian real estate developers are not that keen to go for public listing scrutiny and all when there's cheaper money available at 8-10%, especially when you're talking about a commercial yield generating kind of a property. From an investor perspective, and we've tried this in many cases, the investors try to differentiate between yield versus capital growth. And when they look at yield, like the insurance companies and the pension funds, the 6 or the 7% gross operating income number that we try to portray, sometimes as much as 9%, does not really draw much interest, considering the tax leakages, the hedging costs, and probably you would make more money in Manhattan than you would make in India with all the political regulatory risk. I think that's one challenge. And then you try and add up a story and say, what, there's a 5% capital growth year on year because that's the number by which the rentals increase. And they say, well, if we had to do a capital growth story, we would rather invest in under construction assets. So it doesn't add up. And I think that's really been, no matter how much of tax and other benefits the government has been giving, we were a part of the SEBI committee, etc., but pretty much it hasn't taken off because of these commercial reasons. When it comes to Embassy Blackstone, it's obviously going to be more of a private REIT, really sponsored by Blackstone. I don't know how much public participation it will receive. The similar, IRB infra and some of those InvITs are anyways performing not that great. So that's on the REIT side or the commercial asset side of it. Pretty much from a foreign investment perspective, real estate has been completely opened up. There's just a 3-year lock-in. Other than that, all restrictions, etc., have pretty much been liberalized. What we still don't allow is a pure PropCo, OpCo kind of a structure. Let's say you have a hospital, or you have an education institution which is running, and the land is leased from a real estate company, and you try and get into that real estate company which is called the propco, and all that you're doing is really earning lease rental incomes and nothing else. That's what we call a propco opco structure. Investment into that propco structure will not be permitted. From a regulatory perspective, what we want is there should be some value add that you should provide. Either you should provide value add in terms of developmental capability, or you should provide value add in terms of operation and management. If you're doing nothing else but just benefiting from lease rentals, we call it what we define as real estate business, and that's not just with approval, it's completely prohibited. I think
30 seconds. 30 seconds.
Well, you have to give me at least 5 minutes. I think certain allied themes have also been coming up in terms of warehouses, industrials, which have taken up in a big way. Larger global players, CPP, Logos, etc., Propria, Morgan Stanley are kind of taking up there. There's a lot of demand for ground-up commercial, which is coming up because of the significant monetization avenues. I think from a residential perspective, sales are slow. Market has been, because of the Real Estate Regulation Act, which now provides escrow of pre-sales and time-bound completion, market has been disciplined. You're having lesser players. The smaller players are kind of giving way, and the market is getting more and more sanitized. From a pure structure perspective, I think the market is, real estate went through a whole cycle. It was pure equity, then it was kind of structured debt, then pure debt, and now it is again moving towards a more of an equity kind of a theme, where I think we are seeing a lot of platform deals where larger LPs are collaborating with, in some cases with developers, and in some cases there's hardly a commingled kind of a real estate fund remaining today. In most cases, LPs are taking a call saying, show me the asset and I'll approve it asset by asset wise. Some of the platform is also like the GIC, KKR, or some of there where LPs are taking a significant chunk.
Thank you, Ruchir. I will spend just 3 to 4 minutes, not more than 5, on pharma side.
Yeah, that question. Don't forget.
Yeah, no, we'll do a question answer after that. Yeah. We have some time for Q&A.
Oh, thank you.
Right. Just on pharma side, as Arpan mentioned early in the morning, is one of the very good returning sector for private equity. There have been a lot of exits. It's a great lucrative sector there. Where we are seeing activity on medtech side quite a bit. Specifically in respect to e-pharmacies, we are seeing some activity. We are seeing access to healthcare platforms, and with respect to telemedicine to some level, right? So that's where there are a lot of companies, though many of them are becoming larger companies, but that's something which there is a space. The other area where there's an activity and where there is a rise is on CRO side. CRO space is actually increasing. Clinical trial space, which had kind of stabilized and come down, we are seeing re-emergence of clinical trials. So a lot of activity, a lot of transaction which we are doing is on CRO clinical trial space. On healthcare side, again, we are seeing specifically with respect to investor interest in oncology and on diagnostics. These are the two areas in healthcare side where investors are showing interest to us. Generics has been there as a part. Lot depends on the US government's policy. Considering that the US government policy are not likely to favor, there is some question mark on generic side, but still there are good attractive things available there. Newer areas where we are seeing things is in biologics and biologics similars. There are more startups than larger companies. There are some mid-sized companies, but that's where there is an activity, at least in industry, and that seems to be the area of future coming up soon. Traditionally, when you go to hospital, it's still a stable industry, though it's not very, there are issues involved in it. Fortis, but is a great example of opportunities available in hospital industry. Medical devices is currently down because of mainly on the pricing restriction which government has put in. What you also need to understand is there are few new regulations which are likely to come, which will affect the way this industry will progress, and I'll just list down some of this which are likely to come. New pharma policy is likely to come, which may introduce little more pricing. when it comes to molecules. So that's something which one needs to look out for. New Consumer Protection Act is coming, which is going to put product liability on pharma companies. So that's something one need to keep an eye on. There is a new law which is coming on called DISHA, which is Digital Information and Security for Healthcare Act. So that's something which is something you need to look out for, with somewhat similar like HIPAA. It may be coming up. We have seen the draft is there, it's not yet a law. And lastly, there is a new law coming up on e-pharmacies and e-prescription, which will kind of regulate that particular sector. So these are the new developments which are happening on pharmaceutical side. One major opportunity which is coming because of what the universal access to healthcare bill, which is what we call Modi Care, similar to Obamacare here. And that is possibly going to give a lot more opportunities to in this particular sector, which you need to be. I think with this, I will turn to a question and answers. I think we have about 4 minutes for Q&A, if we can. I think you had a question, right? So, yeah, please go ahead. Just tell your name and sorry to keep you waiting for this.
That's fine. Thanks, Rob Colorina.
Can you tell your name and organization?
Rob Colorina, we're an equity group, AIC. Question for Parth, and then the panelists that want to comment on special situations. Are you seeing, on average, how active of an international participants in these special situation restructuring processes, whether it's out of court or whether it's through the courts? And if any of their panels and the sectors want to comment from a special sits basis, that would be welcomed. Thank you.
So your question is, are we seeing, what's the question specifically?
Yeah, are you seeing very many sort of international, either investor sponsors, or are they teaming up with sort of local company partners? Is it a robust type process, or is it something that's more of a smaller attended type processes?
So it's a let me try, and then I think you guys will maybe have seen some of this as well. It's a little bit of everything. On the two, three things, right? On the large NPA resolutions, we've seen strategics participate. There's a handful of funds like ourselves who've been looking at it on the large ones. Almost all of the large ones, going through all 12 of them, have a strategic in there in some form. Okay, I don't think any of them are by themselves. Maybe Liberty with Amtech is the only one, which is by itself. And this is all public information. For the next 28, those have also already been released, and that's in process. I think there are a few financial investors only in there, which are bidding, but it's just bidding. So we will only know when the bids come up if there is a strategic attached to them. Then I go to the next set, and there's quite a few resolutions that already happened through the NCLT process, and there's a fair bit of financial investors only in there, smaller funds. Any of you guys want to?
So I think you're right. I think on from where we see it, this round was mostly strategics, and therefore the haircuts were also not that much. The financials came in as partners to strategics, but what we have seen increasingly is we've seen global, maybe I shouldn't be telling him this publicly, but we've seen global distress funds come to us looking for local partners to set up local funds and be ready, because they see this space growing. So we are usually the first ones to kind of get the wins of that. So we're definitely seeing that.
No, you're right. I mean, look, I think our industry is small enough. We know who's coming in, and you're right. The opportunity is interesting and large. I would just say, and I would agree with you completely, that You need feet on the street for this. This is not a fly in, fly out opportunity.
And that's what we're telling clients.
Yeah.
We're saying find a local partner.
Yeah.
That's our advice.